As you guys know, there are so many different strategies to trade Forex market. In this video, I'm going to show you guys how to trade Forex double top pattern to make money. And if you guys stick around to the end of the video, I'm also going to show you what not to do to lose money so you don't blow up your account. No! Double top pattern is a reversal pattern. We see this pattern formed in an uptrend and we are expecting the market to move down in our favor. Now here are my 3 rules on how to trade double top pattern in Forex market to make money. Rule number 1. You must have a key resistance level, and the resistance level has to come from a higher time frame. So if you're going to trade double top pattern on a 1 hour time frame, then the key level has to come from a higher time frame, 2 hours, 4 hour, or even a daily time frame. Rule number 2, you must have a open spike to trade double top pattern. Rule number 3, you must control your risk and you should not risk more than 0.5% of your account size on a single trade. So let's go to the charts and look at some examples on how to trade double top pattern to make money in Forex market. Here we have a perfect example of Forex double top pattern. Forex double top pattern, it's formed in an uptrend. So here we see prices making new highs, and we are looking at British pound and US dollar 15-minute time frames. Again, the first thing that we do is we want to find a key level, and your key level has to come from higher time frame. So if you're trading from 15-minute time frame, then the key level has to come from 30-minute time frame, 1 hour, or 2 hours time frame. So in this example, I already have a key level here. So this is a key resistance level, which is from 1 hour time frame, and then you just wait, and when the price gets to your key level, so here we have open spike, and price came to our key level, to this key resistance level. Price made its first top here, and then price came back down to this consolidation base. Price does another retest of that same key level, and that will be formed, then your double top will be formed. So you have your first top here, and then you have your second top here. Price rejected that key level again, and when price break from this neckline or this support level here, that's where your sell entry should be. Sometimes you will see price will just simply comes down to this support level here or this consolidation base, and then it will just take another leg up. So we need to wait for the price to break below the support level. You can take your sell entry here, or you can wait for the price to come back up for another retest, which most of the time it does. From my experience, about 70-80% it will come back up for a retest, and you can take your entry at that time, and then your profit target should be the base of the spike. Now couple of things that they are very important that I want to point out when you're trading double top Forex pattern. The very first thing, as I said, is your key level. That is the most important thing in trading double top pattern. The second important thing is this open spike here. You must have an open spike here to trade this Forex pattern. Otherwise, if you have lot of consolidation base like this one here, price might just simply come to the consolidation base, and then it takes another leg up. So it's extremely important, before you place your sell entry, you want to make sure that you have an open spike here so the market can draw back to the open spike. which in this case we see that. Okay, and the third rule is your risk. It doesn't matter how good the setup is, sometime it's just not gonna work. That's how trading goes. So we just have to deal with it, and we do that by controlling our risk. If you have an account size of $50,000 or $100,000, your risk should be only about 0.2%. If you're starting with a $5,000 account or less than $5,000 account, you can risk 0.5%. But I would not recommend risking more than 0.5% at any point. Doesn't matter how good the setup is. So just to recap, we have this open spike here, price is making new highs, price consolidates for couple hours here, then during London open session we see another spike here to our resistance level, and price came back down to this consolidation base here, and then it does another retest of that same key level, and then price broke through that support level here. That's confirmed the double top pattern is formed. That's when we will take the sell entry. Our stop will simply go above the highs. You just want to give a little bit room here. I would just put it above the highs, maybe 3-4 pips. Just give it a little bit more room for the market to breathe, and your profit target should be the base of the spike. So in this case here, this was actually I remember this trade, and this one is recent actually. It's April 13th 2017. So I took this trade on my live account, and I took the profit around this level here, because this is actually Friday, and I don't like to hold my trades over the weekend, because you don't know what's gonna happen over the weekend. As you can see here, price missed the base of the spike by a couple pips, looks like only by 3-4 pips, and on Monday or on Sunday evening price opened higher, and after that it just took another leg up. Very important side note here, that if it's a Friday evening, you might have to close your trade little bit early. We don't want to expose ourselves to the weekend, because we don't know what's going to happen on Sunday when the market opens again. Now you know when to trade double tops pattern. Now I'm going to show you guys when you should not be trading double tops pattern. Here are my rules when I don't trade double top pattern. Rule number 1, there's no key resistance level from a higher time frame. Rule number 2, there's no open spike. You must have an open spike to trade double top pattern. Otherwise, in my opinion, this pattern is considered as low probability pattern, and you won't make as much money as you will if you have an open spike when you're trading double top pattern.